Hello and welcome to the weekly commodities audiocast, your ultimate source for the latest updates in the world of commodities. I'm your host Ravindra Rao, representing Kotak Securities Commodity Research Desk, and I'm delighted to have you join us today. In the past week, we witnessed some exciting developments in commodities market. WTI crude oil, for instance, crossed the significant $90 mark, and towards the weekend, we observed a notable short covering rally in precious metals. Interestingly, this rally occurred slightly later than anticipated, as we had predicted it might take place before the release of the CPI data. Global markets also experienced a boost thanks to the proactive efforts by the Chinese regulators to stimulate domestic consumption. However, the persistent pressure of US inflation somewhat limited gains across various sectors. The US dollar, on the other hand, displayed remarkable strength, reaching a 6 month high at 105.43. This surge was fueled by robust US economic data, which heightened expectation of impending interest rate hikes. Additionally, a dovish stance taken by the ECB, that is the European Central Bank policy, further contributed to the dollar's ascendancy. In the US, the annual inflation rate continued to accelerate for a second consecutive month, reaching 3.7% in August, up from 3.2% in July. This uptick was primarily driven by rising oil prices over the past 2 months, coupled with diminishing favorable base effects from previous year. Conversely, core inflation moderated for the fifth straight month, settling at 4.3%, aligning with the market forecasts. Recent data also revealed some interesting trends. US producer prices experienced their most significant surge in a year, while weekly jobless claims fell more than anticipated and retail sales exceeded forecasts. Retail sales in the US, for instance, rose by 0.6% month on month in August 2023, surpassing July's figures, pointing to robust consumer spending despite higher prices and borrowing costs, which in turn increased the potential for inflation. Furthermore, the US dollar's ascent received a boost when euro registered its ninth consecutive weekly decline. This decline followed suggestions that European Central Bank might temporarily halt further rate hikes after a 25 basis point increase to a historical 4%. The ECB statement hinted that they might keep interest rates that the key interest rates had reached levels that, if maintained, would significantly contribute to timely inflation returns to the target. In the world of commodities, COMEX Gold exhibited some resilience after initially dipping to 1921.70 per troy ounce. Concerns about another potential interest rate hike by the Federal Reserve was sparked by the latest US data. Nevertheless, market expectation for a pause at the FOMC policy meeting on September 19th and 20th remained largely intact. Conversely, silver experienced positive momentum, benefiting from a rally in base metal prices and increased inflows in iShares holdings. The Fed funds rate projection for 2023 might hover around 5.6%, suggesting the potential for one more hike and no rate cuts. This persistent focus on containing inflation and economic strength may serve as a short term headwind for precious metal prices. In terms of technical analysis, silver spot prices in dollar terms displayed a bullish engulfing pattern, while MCX silver showcased a morning star candlestick formation near the 200 SMA support on the daily chart. Similarly, gold also has formed a morning star pattern on the MCX, and the confirmation of this pattern will come only on a close above 59,150, which was hit last week. This indicator suggests the potential for price recovery in both gold and silver in the week, but it should the pattern should confirm, and if it confirms, we might see a good recovery in both the precious metals. WTI crude oil prices witnessed a significant surge, surpassing the $90 per barrel mark for the first time since November 2022. This surge was anticipated, as we previously noted the possibility of a bullish momentum driving NYMEX WTI crude oil to $90 per barrel. The ongoing trend appears to remain positive, contingent upon the critical level of $88 per barrel holding on a closing basis. LME base metals experienced some fluctuations during the week, influenced by sharp rebound in the dollar and renewed concerns in property markets. However, the decision by the People's Bank of China to cut the reserve requirement ratio for all banks, except those already implementing a 5% reserve ratio by 25 basis points from September 15th, along with surprisingly positive economic data from China, provided some support to the metal sector. On the price front, copper has been on the MCX. Copper has been trading in a range. On the upside, 742 is acting as a good resistance, which is the 200 SMA support. And on the lower side, there is a trend line. 742 is a 200-day SMA resistance, and on the lower side, 721 is acting as a good support, which is a rising trend line support, and in between this there is a 60-day moving average support of 729. So initially we expect prices to trade between 742 and 729. If 742 is taken out, the next resistance is near 747, where prices have on two occasions prices have moved lower. So 747 would act as a good resistance above 742. Similarly, 729 would be the immediate support, and below that, the strong support is near 720, below which we might see further fall coming in copper prices. But 720 is quite far away now. So we will take the range for the week at 729.28, and on the upside 742. Looking ahead to the current week, several central bank meetings are lined up, with the Federal Reserve, Bank of England, and Bank of Japan taking center stage. Additionally, we'll closely monitor flash PMIs from the US and European economies. We expect the Federal Reserve to temporarily halt rate hikes in September, adopting a wait and see approach. However, they may retain the option to raise rates in November, December FOMC meetings if inflation does not cool down. This strategic pause could enable the central bank to reinforce its hawkish stance and keep inflation expectations in check. And that concludes another edition of our weekly commodities audiocast. We hope you found our insights valuable and informative. Staying informed and up to date on market trends and developments is crucial for making wise trading decisions. Thank you for joining us today, and we eagerly anticipate your presence in our next episode next week. Until then, happy trading.